Hi, everyone. Pleasure to be here. My name is Tosin Faniro Dada. I am a partner at Breega Africa. We are an early-stage fund that invests in pre-seed and seed-stage companies, and we are Pan-African and sector-agnostic. Great to be here.
Thanks, Tosin. Please.
Hi, my name is Amanda Cotterman. I'm with IFC. I run our two global funds platforms investing in SME-focused private equity funds and early-stage VC funds. And it's fun to be back in the VC world. I know many of you out there. I've been the portfolio company, I've been the GP, and am now the LP.
Thanks, Amanda.
Hi, everybody. My name is Andrea Beaumont. It's great to be back, I must say so. So I spent 29 years living in Cape Town, which was absolutely great, working with Knife Capital, and now I'm back in Germany, and I'm working for one of the largest Japanese financial conglomerates and manage their European investments now. But SBI, the financial conglomerate, actually is an LP as well as a direct investor, also into African funds and African companies.
How could you have left Cape Town?
I have no idea.
What were you thinking?
Yeah.
Kola.
Hi everyone, my name is Kola. I've just delivered a keynote, so I wouldn't bore you. I know everyone on stage, and it's great not to be on a manel.
Very good. Thank you so much. I'm going to add a little bit more color, if you allow me, because I've known Kola for many, many years. I just want to make it clear that he's one of the most relevant investors in VC in Africa, also one of the most visible ambassadors of tech in Africa. And I'm proud to be able to call you my friend. Andrea, we've been also interacting for many, many years. You've been a partner at Knife Capital, one of South Africa's leading funds, and one of the funds that people speak about a lot because, contrary to many other funds, Knife has been able to execute quite a number of funds. How many exits have you been around?
Five, six? Well, it always depends on whether it's direct funds or part of Grindstone and so on and so on. But yeah.
Right. So you have done what a lot of people only talk about and dream about, if you will. And then Amanda, I'm just going to add a few words. McKinsey, Morgan Stanley, chocolatier, which I was not aware of. Welcome very much. And then Tosin also had, I guess you've worn quite a number of hats in terms of, sort of the big, the PVC, and then a bit of government there, a bit of banking as well. So we have a very, very sort of well-versed audience. Okay, so Christoph asked us to talk about the future. I think we cannot talk about the future without sort of taking stock of where we are today, sort of taking a look at the VC landscape, where we are right now. Early Not Broken comes to mind. It's an article that I think most of you, if not everyone here, has read by now. Ido is somewhere in the audience. If not, take a look at it. Early Not Broken. Short, and it maybe also follows or is quite in line with your keynote. This is still an ecosystem that is taking shape. There's cycles. Everything is, there's a natural course to certain things. So we're on the right track. Mm-hmm. Is that your perception as well? Maybe we'll leave you for last. But just if I start with you, Tosin. So, are we okay? Are we okay? Should we just continue with what we are doing, or do we need to sort of radically change the system?
I think we're okay. We're not dying.
Whoosh.
I really enjoyed reading Ido's piece, so shout out to Ido. And I agreed with a lot of things in that piece. I think we're sort of in a messy middle, so absolutely not broken. But some of the challenges that we have today, limited exits, limited growth capital, concentrated capital, he did a very good job comparing other ecosystems and pretty much reassuring us that, look, we are where they were 20, 30 years ago. But having said that, I think there's still a lot that has to be done. I really like the conversation around non-dilutive capital. What are we doing to ensure that our founders have non-dilutive, de-risked capital? What are we doing with exits in the local markets to strategics, to listing pathways on the continent, or even secondary sales? Why are we not talking about this? 2 months ago, or was it last month, we were all at the Venture Platform Summit, and we had a robust conversation around exits. exits are happening that we're not talking about or not necessarily tracking. And Kola did mention that in his figure, he wasn't tracking secondary sales. Why are we not tracking this? It's important for our ecosystem in terms of where we are today. So in closing, I think we are on the right track. We are in a messy middle. We do still have a bit of work to do, but we need to move from comparing ourselves to the US today and to Europe today. And also, if I may add, it might be a bit controversial, we need to stop asking founders if they can get to 100 million in ARR in 5 years.
Right. Right. So you already mentioned, other instruments. You mentioned exits. You mentioned that Africa the Big Deal needs to do a better job tracking those exits. Thank you. I see.
That's not what I
taking
said,
notes.
David.
Right. Very good. But you're saying, and so Ido's next piece will be, we're in the messy middle. That's what I hear you say, right? Okay,
Yes.
Very good. Amanda, from your point of view?
I mean, I'm assuming we're all going to kind of be aligned on where this is. We're all hopefully optimistic on where the venture ecosystem is in Africa. It's just we're in a day and age where we can have more information and compare across different markets. And so there's a mix of FOMO, there's a mix of are we doing it the right way? But I moved to Africa before venture existed on the continent. It's amazing to see where it's come. I started the first venture debt fund, and now this is finally becoming a topic today. We're getting into the groove. So maybe it's the messy middle, maybe this is the time where it's all going to scale and do well, but I'm quite optimistic on where we are today.
It's going to get boring if everyone agrees, right? So, Andrea, you've been here for 29 years. You moved back to Europe. You see things maybe do you see things differently now that you're sort of in a different ecosystem? How do you reflect on the African ecosystem right now?
I definitely see things differently, but more because I hear a different narrative now, and it's interesting to kind of go and see all those perspectives. I really loved the article. I think it's absolutely fantastic. But for me, there were a few points missing, and I think we need to decide whether we want Africa to be part of the global ecosystem or not. I mean, if we decide not, well, then that's a decision. That's okay. But if we want it to be, then we need to kind of go and understand what is the narrative that we want to kind of go and play there. So, and I think that's for me a very interesting one. I was at a presentation the day before I came here about investing in Africa, and it was very interesting how people were speaking about that, but I think we might get to that later. The second one that I really try to kind of go and figure out is this whole thing about we are early. I mean, venture capital globally is not in an amazing space. A lot of people globally say that VC is broken. So if we are 6 months behind every trend, are we just going to be 6 months behind getting into a broken thing? So, or are we actually doing what Africa has done quite often, and that's leapfrogging and coming up with something different? So I just want to kind of go and put those kind of points out. A, do we want to be part of the global ecosystem or not? And B, well, if globally there's a big question mark behind venture capital, well, following the same path might actually not be the right thing at all.
Right. I'm gonna stir things up a little bit before Kola comes, because otherwise we're gonna get okay. So USAID, geopolitical challenges. We have the first vintage of VC funds bring back their returns. It's not a pretty picture. Returns are not there yet. We are over-dependent on overseas funding, be it IFC, being the European DFIs. Why would these DFIs fund venture? It is messy, it is small amounts, it is a headache. I think there's a cold wind blowing. I think that development capital might not always be there. Are we geared up for that next step? Have we already localized that local capital? If not, what does the world look like? This might be the last Africa arena. Kola.
Tough one.
I'm glad it's
Tough
you.
one. So, I've told this in private, and I kind of teased them a little bit on stage. So like you, I think it's an important conversation to have we just had our summit, and this was the conversation we were having, and I didn't even know Ido was publishing that article, so we were all in the same brain space. I think that joint parallels, particularly across different time scales, is very dangerous because of the way things like Moore's law and compounding works, especially also when you consider the fact that the various inputs are not always equal. So it's very tough to draw parallels, but as humans, we have to think in comparisons, right? And so that's my first point. I think that the way our ecosystem evolves will be different from the way other ecosystems have evolved. And I think you make a really good point that we are enjoying this rise of African VC and startups at a time in world history where venture is generally struggling. And so our experience of it is expectedly different from what was obtainable back in the early days of venture in Silicon Valley. Companies only raised one round, right, or two, and then they went on to exit. So they were, by definition, capital efficient. And so my conclusion is that it's not as if we have to fix our ecosystem, because it's, like Ido said, it's not broken. But we have to expand our horizon and our definition of what success looks like. We have to expand how we engage in the ecosystem. And I think DFIs, to your point on DFIs, I think DFIs play a critical catalytic role, but DFIs can also do much more than what they're doing today. There's different ways that DFIs can engage, and Amanda is leading some of those efforts at IFC already. And so I am just as bullish as I was in 2014. I think that at the summit last week, or 2 weeks ago, we launched something in partnership with STARS. I'm sure you all know STARS. It's called the STARS Ventures Platform Liquidity Index. And this is an effort to basically track more closely what's happening in the liquidity ecosystem across Africa, both secondaries and primaries. And it's our contribution. We're not trying to take over the role of folks like Big Deal, but it's our contribution really focused on liquidity. Because when you have that data, then you can tell a better story and keep the wheel rolling.
Right. So I want to come back on the point you mentioned about sort of capital efficiency and what you expect from founders that maybe is different from before.
Yep.
But before we get into that, I still want to kind of tease you a little bit about the USAID development finance. So, Amanda, you're obviously IFC. What is the conversation? Has the conversation changed within the house you work in, the building you work in? Do you get different questions about the work that you do? Do you need to justify your programs? Has anything changed?
Maybe I think what's important for everyone to understand is we're
Just
learning.
chat about rules, right? Anything that Amanda says will stay in this room.
We're learning while everyone else is learning. We don't have the right answers. We don't know exactly what is happening in certain markets. We have history of what we've seen in other markets. I mean, we invested in a really small emerging market company called Samsung 50 plus years ago, and look where it is today. So, we have history, but we're still learning and figuring this out. And so from my time, even before IFC, to the 6 years I've been there, I've seen a lot of evolution in a positive way amongst the DFIs, but we're definitely not always the right answer, and we still have a lot to learn. Now, with all the changes that have happened globally, what is at least hopeful as IFC is we're part of a larger organization that has so many different investors. It's not just one government, it's many governments who are investing, and so our narrative and what we're focused on hasn't changed. It's still improving livelihood and prosperity globally, and it's how we then interpret that. And what's really exciting is part of our 2030 strategy, which came out this year, is doubling down on equity. doubling down on frontier markets, doubling down on mobilizing private capital. So working hand in hand with the funds we invest in, working hand in hand with the broader ecosystems to drive more capital into these markets. And then I think some of our peers are also thinking along the lines that we have over the last few years is how do we carve out pools of capital that allow us to take more risk? So the two platforms that I run are our balance sheet money. So, we're a AAA rated organization. We still have to be good stewards of that capital. But our board has said, we're going to let you take a little bit more risk in markets where the private capital ecosystems are still developing. And so that allows us to invest in ventures platform and other players in the market where some of our peers just aren't able to take that risk yet. And with that, it's not just an LP investment, it's how do we think about building out the broader ecosystem? How do we lead the charge on bringing all investors together in conversation to drive more capital into the market? How do we get more local capital providers to come alongside us, either through blended finance facilities or through being a first mover to give them the confidence that we've gotten comfort with an investment? It's still a long ways to go, but it's how do we bring up the broader ecosystem alongside our investments?
Right. And just to follow up on that, because is there, and again, right, there's a conversation also about the future and what the needs are, and what change is, or what, maybe not change is not the right word, but then further, how will this develop further? And then is there a role for development institutions, take the IFC, later in the finance value chain? So, for example, we'll talk about exits, but I mean, exits are far and few. Can the IFC play a role in secondaries? Could the IFC take LP stakes? Could they catalyze liquidity? Could they prioritize catalyzing liquidity over returns? Could they kind of help kickstart that? Is that a conversation you're having?
These are conversations that are happening right now. So we're working with different organizations out there on how do we build out the secondary market, both for direct investments as well as for LP stakes.
Right.
It's top of mind to figure out how do we balance our impact with our financial returns, just like everybody else in the room here, thinking about how they can really drive the broader ecosystem. It's taking a lot of stakeholders, though, to get on the same page. And so while we talked about Africa leapfrogs and we are always a bit faster, we're still large bureaucratic organizations. And so it might not be happening as fast as everybody wants to see.
Right.
But it is top of mind. It is something our senior leadership is thinking about. And what's even more exciting now than ever is I'm seeing more of the DFIs coming together, and even the impact-minded commercial investors coming to the table to help us brainstorm and finding these solutions. Remember, it's our ultimate goal that we're not here in the future. We don't want to be here forever. We want everyone to graduate from us and we go on to other markets where we can add value. So it is something we're working on. It just might not happen on the timelines of as fast as the broader venture players are thinking.
Right. Okay. Maybe to go back to the founder and the point that Kola raised about capital efficiency, what the priority should be for the founders that you look at. But maybe Tosin on your side, right? So do you feel the conversation has changed, and has that changed the way that you assess a company before you invest? Has it changed the way in how you measure performance, what you get excited about? Is profitability versus growth, has that tipped in a certain, is it?
Yeah, no, very good question. I think definitely it has changed, but it didn't just change. I think this course correction pretty much started like 2 years ago maybe. And right now we look for quality over growth, to be honest. We look for fundamentals that signal inevitability. As an early stage fund, we invest in founders. And for us, the most important thing is a strong team. But beyond a strong team, I want a transparent team.
Right.
I want an honest team. I want a team that can keep to their word. That's important to me.
Yep.
And also, the other things like the problem you're solving, the solution, efficient acquisition. I think that's also huge as well. Most times acquisition is expensive and founders don't think about how to reduce that cost as they scale. These are things that they need to think about and also margins too. You have to be margin conscious as an early stage founder.
Right. And maybe the same question for you, Andrea. So obviously you've invested in African companies for 20 odd years. You're now investing in global companies, European companies.
European.
Has your lens changed? Do you look for other things? Is there an African lens and a rest of the world lens before investing?
The fundamentals are the same. The fundamentals are the same. The ecosystem is slightly different. The way that funding rounds are being done are different. Not necessarily better, but definitely different. I think when it comes to, there was this very interesting slide that we saw earlier about how long the funding rounds are now. And I think that is just one thing. If an entrepreneur comes to me and says, I need amount X, and I mean, talking about Europe as well as here in Africa, I need amount X because I will kind of go and raise my next round in 18 months, and I don't want to dilute that much, therefore, I mean, all those great, fantastic things.
Right.
I think one of the things that I need to nowadays look at is, well, assume you actually need the average size it takes nowadays to get it. Do you actually have the business model or the funding? Like, can you last that long? Because otherwise we'll get to the next, we'll get to the down round, we get to all those other kind of beautiful little bridge rounds that just, and I think the reality of, let's follow the Silicon Valley kind of, in 18 months I do this, at that kind of uptake, and so on and so on and so on. I think that's no longer really valid, and as an investor, I need to kind of go and make sure that I factor the reality kind of into it. And quite a few entrepreneurs don't like that.
But so, Christophe, I have a red light signing in that we're over time. We still have time, right?
It's actually very distracting.
Anyone?
It's
Christophe,
in my eyes.
I have a red light that we are over time. We still have a bit of time, right? Help me out here. We still have time? Okay, good. Let me know.
Yeah, we should.
Okay.
We should. We take.
Huh?
We just take time.
We take the time. We take the time. Very good. So listen, back to Europe. Are your investors you work with today, do they look at Africa at all? Does Europe look at Africa today?
So it's a very interesting point. On the one hand, I see a lot of statistics, and Africa doesn't feature. It
Right.
just doesn't come up.
Right.
Then, on the other hand, I attended a Africa Investor Summit last week, where there were 40 investors. They were all interested in Africa.
Right.
And what they did is they asked exactly the same question. The first question was, when you think about Africa, which word comes to mind? And Africa, opportunity. And it was so interesting to see how the people were struggling. Then the next question came, well, what should be the finance mechanisms for Africa?
Right.
And people couldn't answer this.
Right.
And the next thing was like, so I think that's my big thing is people believe in the opportunity. They believe that there is something,
Right.
but they can't define something.
Right.
Because they say, well, it's different whether it's impact or not, country, this, that, all those kind of things. And I think that is at the moment that there is a coalition of the willing.
Right.
There is a coalition of those who want to, but quite a few don't know how. And I think that is something that Africa needs to fix.
But maybe we can fix it right now. Cola, like, not in one word, but I mean, why do you do what you do? Why are you excited about this? You could do anything you want. You could be the president of Nigeria, but no, you chose venture capital. Why?
Well, because I guess I'll say why I started. One is, it was obvious to me that there were many things to fix on this continent. And if I was going to be here, I wanted to be a part of fixing it. Moving on from that is, I probably would have given up if there hadn't been any performance, to be terribly honest. Because you can only hit your head against the wall for so long. And I think that I share my personal experience to encourage the room that we are making progress. There was a time when success for us at Ventures Platform was a company being accepted into Y Combinator. Mm-hmm. Like literally we'll stay up till 2 a.m. for the news. And we'll throw a virtual party when the acceptance email came in. Now, even before YC stopped prioritizing Africa, we stopped prioritizing applications to YC. And we can do that because, as Maxine showed, you no longer have the missing middle. You've got funds like us and Breega, thanks to the support of DFIs like IFC, who are catalyzing the ecosystem. So we have made progress.
Right.
I also gain encouragement when I look at markets like India, for instance. The share of, and Amanda can speak to this, the share of DFI investment in Indian VC firms, I believe, has shrunk over time. Because, like she's put it, private capital, the market is being de-risked, and they're achieving their results of catalyzing the ecosystem. So I think we need to make haste slowly as an ecosystem. Nothing needs fixing. It just needs broadening. That's my take.
Right.
Yeah.
We need to take haste slowly. I'm gonna. Okay.
That's a very Nigerian
No. I'm.
rush small.
Yeah. Very good. Okay. So we are going to slowly sort of wrap up the session. So just to sort of dive deeper into what Kola just said, right? Kind of that, positive with a sense of realism. So what are some concrete things that you would like to see? What do you like to see happen over the next years?
I have my answer. Oh.
There we go. Amanda, please.
I want to chime in on that.
Well, Kola already said it earlier. Returns.
Returns.
I mean, the more DPI there is, it sells the story.
Right. So as an ecosystem, as we should, make sure that efforts are geared towards allowing those returns to happen.
Yeah.
Okay. Andrea? Yep.
I can go.
Wilson?
I would like to see reforms around local capital,
Right.
especially around pensions,
Yeah.
institutions, and insurers.
That's
Right.
Yeah.
Can you take it a bit further? Can you make it a bit
Yeah,
more?
so like reform.
Is it policy? Is it regulation? Is it
policy,
education?
education, just bringing them into the conversations,
Right.
especially the pension guys. They're never in the conversation.
Right.
And they're sitting on billions, trillions of dollars
Right.
globally. And
Right.
so, especially on the African continent.
Right.
So we need to bring them in.
Right. Christoph, next year, we'd like to have more pension people on stage. Where's Christoph? Okay. Andrea?
I would like to see, and it might be controversial, but I would like to see more focus.
Right.
I mean, we tell every entrepreneur, yes, you can do A, B, C, D, and E, but focus.
Right.
I would love to kind of go and next year kind of sit there and saying, Africa is for the next 2-3 years focusing on the following 3 sectors, whichever, and we are going to show DPI, we are going to come up with showing success in those 3. Because I think Africa is far too diversified, and it makes it quite often difficult to grasp.
Right.
So I personally believe that would be a good next step.
Wonderful. Kola, final words for you.
Yeah, it's great that we have secondaries, and secondaries are important, particularly for early stage funds who can build an entire business model on the back of secondaries. However, I'm worried about constipation in the market. Because if you have all those secondaries and you don't have large primary exits or IPOs or strategics, the market gets constipated. And that's never fun. And so this is why some of the ideas we've spoken about today are important, because ultimately these companies we're building have to be acquired. The customers that we're building them for have to buy the companies so that we can keep it going.
Right.
Yeah.
Okay, I'm not going to try and summarize this. Early not broken. Some key takeaways, and this is important, right? These are 4 of the most relevant people in the African VC ecosystem. I'm still counting you, Andrea. And they're telling us, early not broken. Yes, exits. Yes, different instruments, if you will.
That's the middle.
Local capital, pension. And we move slowly with haste. Hastily with slow. Okay. Thank you so much for being with us this morning, and please join me in thanking the panel members. Thank you so much, guys. Thank you.